Okay, let's begin. Well, thank you all for your patience. And this is a common question that I'm getting for a lot of people. It's like, why are things happening? Why are we in this position that we're at today? A lot of people think that just because jobs and layoffs are continuing to happen, that we should continue to see a decrease in prices. But that's not the entire story. And so today, if you're a buyer or a seller in the Bay Area, or you're thinking about being a buyer or seller in the Bay Area, you may want to know a little bit about the history of things, the present of what is happening as we speak, and likely the future. So we're going to be covering a lot of different things, and we're going to go back a little bit in history as to why we got to where we are at today. So let's talk about it. A little bit before we begin talking about the status of the previous market, the current market, and the future, talk a little bit about the team itself of who am I and why am I the person talking about this. So as many of you guys know that are watching on the live stream, I do have a YouTube channel. I've been sharing all the kind of insights and all the things that I see happening day in and day out. And I've been just giving the data, giving the information so that you can make an educated decision before really much of the mass media picks things up. You're probably going to see a lot of hysteria that'll be happening as the mass media will be seeing things as the different things progress. You're going to have a lot of headlines. Home prices are on the rise. Home prices are breaking record heights. This is the fact, and this will be occurring as these numbers that are pending will actually close. And because I personally make offers every single week, I have a pretty good idea what it takes and also where things were relative to the history as to those specific homes that are actually going into contract and eventually close down the road. So a little bit about the team. We're a husband and wife team. I do real estate in the Bay Area, so I help you everywhere in the Bay Area. My wife does the lending side, so it makes it a one-stop shop for buyers and ultimately sellers. We've been growing our team, so we have about 11 people on the team now. That's a combination of a total of about 7 real estate agents and 4 different people as support. If you haven't, follow me on YouTube or subscribe on YouTube, connect with me on Instagram. And to give you a little bit of an idea, we've helped over 80 clients with their moves last year alone. And this year, we still see a lot of activity, even though there is a lot less homes on the market. So let's talk about the history. What in the world happened? Like, how do we get to where we're at? The time ranges I want to bring up is first when COVID occurred, which is March of 2020 up until March of 2022. So during that time, the Fed had to continue to bring down rates, continue to do a lot of stimulus to try to bring back up the economy, as a lot of places were shut down. I mean, we all forget that California was shut down for an extremely long time. So what did that mean? A lot of things happened. People were working from home a lot more. People valued their home a lot more because they were at their home a majority of time. These are all influences or desires as to why there's such a strong demand of homes, right? People couldn't travel, they couldn't spend money on lavish things. So all of their money and their attention went into the home because they were spending all of their time in the home. So that was what occurred from March 2022. So what happened after that? Well, as so much money was then spent in these different sectors and there was so much pent-up demand, the Fed was really late to the game. So they were really late to increasing rates. For a while, as you can see from April of 28 and 2021, they were saying like the inflation was just transitory. How many of you still remember that comment that Jerome Powell had made? So they were really behind the 8 ball or behind the game on increasing rates to cool down inflation. Inflation printer at that point was already over 5%. And so what did they do? They did nothing. So they waited. And as the months went on, they realized, wow, inflation is now out of control. There are some numbers at that time, inflation was over 10%. And what did they do as a response for that? How do you tame inflation at that point? Or what can you do to combat that? You got to continue to increase interest rates very aggressively during that time. So what happened between March of 2022 is that's when you really saw the increase of rates. And so they had to keep increasing it very quickly. Because take a look at these numbers, right? Goes back to what I was mentioning. January of 2022 is when they started kind of briefly increasing rates, but really March is when they started really accelerating. When they started accelerating the Fed fund rate. And so they went from 3% to 6 to basically, well, the interest rate for mortgages went from 3% to 6% in about 6 months. And so because of that time, a lot of buyers were really spooked. They didn't know what they wanted to do. They wanted to do a kind of a wait and see kind of approach, right? And so during that time, then home prices have continued to decline, especially in the Bay Area, right? So why did home prices in the Bay Area decline faster than everywhere else in the country? Several reasons. Because most tech companies are aggressive in terms of their growth stocks, as you have seen, whether it's a NASDAQ or just other growth companies, are the ones that get hit the most. You see devaluations of startups at that point declining by 70%, 80% already at that point. Now, on one end, you may say, was it really warranted at that kind of decline? But it went really, really quickly. So when their valuations were cut that quickly, all these companies had to be more focused on profitability. Now, some companies may never be profitable and they may just go under, while others really have to shrink their employee base and their expenses drastically to make sure they have enough runway to survive. So what happened and what's still happening today? Tech companies' valuation got impacted tremendously. You have even big tech companies that got impacted because they're not going to be able to escape this either. You have Meta that continues to lay off tens of thousands of people. I know they made their round of layoffs for engineering recently, and they're going to be making another round for their like basically generalists, so like HR, marketing, sales kind of things. That's going to be happening by May in terms of that next round. And every company will be going through this. Well, not every company, most companies will be going through this just to shore up their balance sheet, make sure it's stronger. And keep in mind, if you look at the books of places like Meta and Apple, they're still making a ton of money, but they are trying to reduce headcount, but also reduce their expenses, especially in areas that were way too far out, right? So they're a lot more focused on bringing revenue today, shore up their books, make sure they're profitable. But you're going to continue to see this happening, right? So on one end, you're going to keep hearing this bad news. So if you want to be a kind of a naysayer, you may be like, look, all right, I just see this. I don't want to buy anymore. And so be it. That may be your choice. But there are other things happening. Like there are other repercussions for this. And we'll talk about that in a moment. You're also seeing some unexpected consequences happening, right? So you saw SVB not long ago. You see First Republic now I don't know if they're in turmoil per se, but they've been deeply impacted. The amount of money that have been withdrawn is spooking some investors. And so they're needing to shore up their balance sheet now. They're selling their securities, and we'll see how that plays out. This is all as real time as it got, as in this was all within the last day. So you're going to have this continued kind of impact that's unforeseen. But what about housing? Like you would assume, and if you only knew that side of the equation, you would say, all right, everything's going to go down. Assets are going to go down. It's a guarantee that this is going to be occurring. That hasn't really been the case. Take a look, and this is all public information, and I can send you the latest charts, but this is happening across the entire Bay Area. You can see home prices have had decline to what I brought up to about the beginning of this year, but they have been in a very stark rebound. Make a single offer and look at what other homes have sold for in the last 1 or 2 months, and that home will go for much more than that previous one. Just make a single offer and you will find out very quickly yourself if you compare a townhome to another townhome that sold recently, or a single family with another single family home recently. And so the question is, why? Why is this happening? Let me explain why, and you can start to understand. We saw all these different things on the demand side, but at the end of the day, it's a supply and demand. So on the demand side, it has been impacted. And that is true. There are less people out on the market than a year ago. There are a lot of people that are scared. That is absolutely true on the demand side, and I'm not sugarcoating that at all. But at the same time, what did we see on the supply side that people are not taking into consideration? For most people right now, rates will be between, if it was a jumbo loan, and low 5%. If it was a conforming loan, it'll be between 6 to 7%, usually they're around the sixes. But did you know that 88% of home owners have a mortgage rate that's under 5% in California today. And then you can imagine how many people are under 4% of that number. So the answer, the fact is a lot of owners have very low rates, right? So that they have a lot more ability to ride things out, right? And that also is added to what their property tax is, which is generally lower if they owned it for a long time, right? And so even if they get laid off, they still have a decent amount of runway. And so what does this mean for those owners that come time to want to sell? They got to think about it a little bit more closely. They got to figure out, does it make sense to do it? Or if I have the money, why don't I just rent this out? The market for rentals is still very good. Where have you seen declines in any rents in the Bay Area? It's still extremely fast to get rented. So they just rent it out, keep that low rate, and buy the next house. So the issue, as you can see, is the supply side is down for number of new listings by 40% versus last year. So you may be asking, how would things change, right? Like, why would things change? So the difference now, though, is, okay, supply side has been down by 40%. We have a lot less homes beyond the market. At the same time, what about the buyer side? Why is there more confidence now? The supply side hasn't really changed in a while, but what has actually occurred on the buyer side to then cause this competition again? I've always pointed it out for a lot of people, and for all of you listening right now, you may be in the same boat. When you are in a band of rates, this becomes the new normal. People have been in this band between 6 to 7% for 5 months, 6 months now. It's not getting a whole lot better. It's not getting a whole lot worse. So when people are in this new normal, people can realize, all right, it is what it is. I'm going to lose my income. I'm going to use how much down payment I have. And then based off of that, I'm going to be able to buy up to X. Where should I be buying up to X? And then people are actively looking back in the market. Because think about this, for all of you that may be thinking about, I'm just going to keep waiting and let's see what the market happens. Or let me see what happens if the rates drop. I'm waiting for the rates to drop. What do you think will happen on the demand side? Right? Like, you're going to get a whole lot more buyers that will be back in the market because they have the same mentality. We're going to wait and see. We're going to wait and see. All those people are waiting and seeing. But at the same time, a lot of people have realized too, it's in the new normal. So great, if rates drop down the road, I'm just going to refinance. And I'm not going to go through like the competition. Right? And so that's why we see this activity. Now, if the rates kept rising, I think we would have kept seeing what we saw previously. We probably would have saw a decline in further of home prices. But because rates are now in this range, then people are like, all right, it is what it is. Everybody can still buy a home today still. Now, you may be not as comfortable in terms of what you can buy up to, but there's nobody that can say, oh, all of a sudden I cannot buy a home. Because do some quick math. When it goes from 3% to 6%, did your payments actually double? The answer is no. Your payments changed by about 28%, 30%, but you can still buy a home. It did not change by 100%. Right? That's the math that people just have to realize. Like, you go from 3 to 4 to 5 to 6, it's still doable. Now, what you buy up to may be higher, or you might have to lower your purchasing amount, but it's not doubling your expenses. And so people are factoring that in, especially when times come for renewal, right? What's happening right now? A lot of leases are being renewed. So people are asking, wow, when I want to renew my lease, the lease is a whole lot more expensive. At least home prices, at least the interest rates are within a band now. All right, let's go back in the market. Let's try to buy a place. And so that's what you see. So the buyer demand side has picked up tremendously too, right? Supply side hasn't really changed. I mean, they've changed by, there's more homes that are on the market in the spring, but percentage-wise, it's a 40% drop from what we saw last year. And it may get worse, to be fair, right? But on the other side, on the purchase side, demand side has picked back up because of this thing, because we're in this new normal and buyers are realizing it and then they want to buy. So what is happening then? Like I said, make one bid for a house and you will see it personally yourself. You can either take advantage of this time right now, which is, you know what home prices are going to be when they show in the May figures. to keep this in mind, right? The May results are from all April solds. It takes 30 days to close. So everything that you see in May of what sells was something that was in contract already in April. So if you know now what I just shared with you, you will know that home prices are on the rise. Now, it doesn't mean you should give up. We'll talk about strategies in a bit, but the idea is that you should have that in mind. Do not think that you're the only buyer. Don't try to think, oh, what if we're going to wait till rates are lower. This frenzy will just be worse, right? So those are things to factor. I'm going to mute you for now. So those are the things to factor in terms of just what the situation is. It is the reality. Most times in the Bay Area, home prices are on the rise. Like on average, home prices are not flat. Just keep that in mind, right? Just think about this. Like the S&P market for stocks over time is not flat. That's not how markets work. It's normal for prices to be rising. So don't be scared one way or another. Just understand like what is the game plan that you have and what should you do about it. And really, unless there was some really big kind of circumstance, which there may be, I don't know, neither do you and neither does anybody, unless there's some huge event again that's going to be forcing sellers to sell, and I'm not sure what that would be, we're going to be in this kind of sticky situation for a long time, right? The buyer demand is now the new normal, as in they're okay with the current rate, 6 to 7%. You're going to see inflation get tamed more, which will only help with the rates, which may actually drop the rates, which may actually bring in more buyers. At the same time, the sellers are, unless they're forced to sell, which many are not doing that, we're going to be in this kind of position for a while. So the next logical thing is like, what should you be doing? Now we have people on this webinar that is a seller. I mean, we have plenty of sellers that are out there that are thinking about this. We also have plenty of people that are certainly buyers, and you're asking yourself, maybe you should just sit around and do nothing. That doesn't really help with your goals, but there are strategies and some things to be doing right now. Even amongst myself, I bought a new home myself in May of last year, which was a very crazy frenzy market. And there were some approaches that I'll share with you what you should be thinking about and what should you consider. So if you're a seller, what should you do, right? I mean, as a seller, the good news is from the price perspective, we've had a very good bounce back, right? So it's been a very favorable time for sellers. Like for those that wanted that second wave, like it's hard to argue a better time. So if you're trying to like think about selling in the next couple of years, it is hard to not want to sell when there's so little inventory, right? There's so little homes to choose from. I mean, all these people that are on this webinar right now, or the people that are tuning into the show, like there's so many buyers that love to buy from you right now because they need to make their moves. And so the question is, if you plan to try to sell in the next couple of years for your own reasons, whether it's liquidity, whether you're retiring, whether you just want to downsize, like it's a fantastic time for that without a doubt, right? Because you're competing with so little other products on the market. So that's something to be mindful of if you're a seller. Now, if you're a buyer, what should you do? It's tough. Like to frame it on any other way, it's BS. Like it is tough for buyers. It reminds me of the same time last year. Like home prices are definitely on the rise. This is a mental game now. Like at the end of the day, you shouldn't be like, oh, wow, I lost one time. I give up. If you're that way, then you're not going to have too much success, right? You shouldn't have that mentality. Now, you should still be ready to be moving, right? If the perfect home comes on, or if a home that comes on and is within your budget, do what you can to try to get it, right? But it is a complete mental game right now. You got to be patient. You got to have perseverance because, I mean, at the end of the day, there's only one winner for this house, right? Like there's not, you can't all share a house. There's no new homes coming on the market. There's very little new construction, right? I also suggest you, and this is what I did too, is expand to other areas. Like there's so many areas that have gotten way better. There's so many areas that are nice. You may have really thought about, oh, I want to live in Mountain View or live in Sunnyvale. Like that was fine before, but just think about it. You have so little choices to have, right? So why not you broaden it? Like there's so many good cities around. Like Santa Clara is nice. San Jose is nice. Milpitas is nice. Fremont's nice. Like there are so many good areas and they're not far from one another. So be open to expanding other areas that could be fitting along with your price range or your mold. The other is be more open to be like, keep this in mind, this is your potential starter home, right? Like the starter homes in the Bay Area are not single family for most. they tend to be condos and townhomes, right? There's nothing right or wrong with it. At the end of the day, live in a home that you can enjoy. It could be a combination of location, combination of what you can afford now. And then over time, use that as a gain to either buy a new house or rent that out like everyone else is doing right now and just buy the next one. So just being flexible of like this home, this is not your forever home. For a majority of people, it's not your forever home, right? So be mindful of like, how can you expand the parameters? Hey, I wasn't thinking about this area before. Like someone working with myself, I can give you some other options that others are considering, right? Last but not least, know your lending options in advance. You may have a price range that you got pre-approved for, right? You maybe have a different comfort level. Can you go a little bit higher? Can you make any adjustments? Can you go with lower money down, right? Play around with these numbers. Like, okay, maybe I was only looking at $1 million. Maybe I can look at 1.1. These are all math that can be there for as a buyer. But make no mistake, I'm not saying it's an easy market. If it was, it would be in that downturn. But you saw there's not too many people that were that active in that downturn. People were waiting. It's going to go down indefinitely. And now things have reversed, right? So be patient, be persistent. The ones that are successful are not the ones looking for these random needles in a haystack. To be fair, they're the ones that are just active. Like they realize you're not the only buyer. There are many options out there. They're flexible of their options. And then they actively make offers. And then it's a matter of time. If they're making good offers, they're looking in the right areas, everybody will be getting a house. So those are the thoughts of what I personally see and also what I have to personally go through. Give you an idea of my own search. We started looking in January of maybe a little bit early, but let's say January of last year. And then we ultimately closed on a home and got in contract in, let's say, April. We first started on our search personally in Sunnyvale. But what we realized with Sunnyvale, with that budget that we had, is the type of homes didn't really work and the prices kept rising. So even if it did work in the past, it would not work in the future. So we started looking at Santa Clara, same kind of idea, right? Like we need a specific size of configuration. Some homes are just not built a certain way, right? Like if you want spacious rooms in Sunnyvale and Santa Clara, it's hard because homes are just not built that way before, right? So sometimes there's also that realization, sometimes in that city just doesn't have that kind of home. There's nothing you can do about it. You can either change your perception of it or increase your budget or move somewhere else, right? And then we ultimately landed in San Jose. And San Jose had a lot more of that style for what we're looking for. So those are like the things to be mindful of. Like, just because you have this vision of you want something doesn't necessarily mean like that city may even have it. Even if your budget was higher, it may not even exist. So those are the things to really understand of that combination of your wants and needs. And is that product actually there in that city or county? And so because of that, because it's a patient perseverance kind of game, especially when it comes to buyers, is you always want to go back to like, why were you even thinking about buying to begin with? Like for us, we want to buy to combination. We want to divest from our real estate portfolio. We want to get another home. We understand that it's a strategy from that perspective, but yours could be different. Yours could be, I'm sick and tired of renting. So why would you follow back to that? Just because things are a little bit tougher, why would you fall back to the whole reason why you're looking to begin with? If you felt it was a waste of money, maybe you want to get out of the family, right? Like leave out, like have your own place, right? Maybe you want to just have some exposure to real estate. Like these are all things like they shouldn't change just because things are a little bit tougher, right? And that's the things to really focus on. And so what are the long-term goals? Focus on that. Be in the game, be active, look every week. Like this is not something that you like look once a month and complain, why is there no homes on? You got to look every week. Now, it doesn't mean you look every single day. That's not needed. I will help you by finding what may work. So I'll supplement your search, but looking at once a week, Thursday and Friday is enough for the entire week. You'll be able to see all the homes that you would want to see that week. So it's not a 7-day-a-week kind of thing, right? So love to open up. If there's anybody that have any questions or thoughts, let me know. Otherwise, feel free to send me a call or a text if you want to go over an actual game plan by yourself of buying or selling or strategies. We can curate a specific game plan that is going to be suitable for you. We're still very busy helping a lot of people. There's a lot of people that are back in. I understand people are kind of giving up, but at the end of the day, it's the perseverance and the persistence that has been successful. So if you have any questions, feel free to send me a text, give me a call, send me an email, or if it's your first time watching the show, feel free to follow me and subscribe on my YouTube channel, which is below. I'll take a moment if there's any questions. Otherwise, we'll wrap up pretty soon. All right. Well, if there's no questions, we'll go ahead and wrap up. Thank you all for attending. Once again, my contact details are on the screen and looking forward to help you every step of the way along with the journey.